2 years into higher rates, into this like kind of, I don't want to even say volatile market because it's not really up and down. It's just been pretty steady as far as higher rates, a tougher affordability, making it real hard on potential buyers, real hard on people trying to upgrade their homes, things like that. So like 2 years ago when all this started, Brittany, we heard a lot about buy downs. We heard a lot about marry the house, date the rate, things like that. Now we're 2 years in, and it's just been steady. Every time we see a little bit of relief, a month later, rates go back up. So we see a little relief, people start looking again, and then all of a sudden, rates are back in the sevens. So it just makes me want to talk more about that rate buy down again, and kind of I guess revisit that, and giving the consumer some options for affordability, because we know there's a lot of pent up demand. We know that there are, people are just looking for options. People are looking for us to help solve their problems. So, like, can you talk a little bit more about what the buy down is, how it affects their rate, who pays the buy down, all those type of things?
Yeah, I'd be happy to do that. I'm happy to be here. The buy down, like you said, is was a very popular product when it came out, and then people I think forgot about it because they were just waiting for rates to go lower. And we've seen over the course of 2 years, just like you said, we're in an environment where we're not going to see the fours and fives, right? The election's over. Rates have not dipped when they thought they were going to dip. So we have to have other options to give to our buyers. So the buy down is a great option. There's been a lot of misconception in the industry on buying the rate down versus the rate buy down. Although those words seem very similar, a lot of people just think about the consumer like, I'm purchasing a house, so how do I buy the rate down? What we're talking about today is completely different. It's the buy down, it's the temporary buy down. So basically, what it is the buy down is has to be paid for by the seller, and it is a price of I need to figure out how I'm gonna say that because it's confusing. So basically, there's 3 different options. You can do a 3-2-1 buy down, a 2-1 buy down, or a 1-1 buy down.
Okay.
So you take the interest rate of today, which let's say, for instance, it's 6.75. And so if you do the 3-2-1 buy down, the first year you're paying a rate of 3.75. The next year is 4.75. The third year is 5.75. And then the fourth and final years is 6.75. So you're temporarily buying the rate down. That's where the whole slogan, buy the house, date the rate, came in, because you're buying the house of your dreams now before that goes up. And I'd like for you to touch on that, how, the appreciation of the houses these days. But you're buying the house now, and then when rates go down, which we think they will in the next several years, we can refinance.
Sure. And I mean, so there's a couple things that I think that make this attractive, right? So if we think about the appreciation, we continue to see appreciation year over year here in the Baton Rouge market, in the national market as well. But on top of that, if I were to ask, just almost anyone in the general public who's looking to buy a home, do you think you're going to be making the same amount of money in a year? Or do you think you're going to get a raise? Or do you think you're going to make more money in 2 years, in 3 years, right? So like, if that's the case, well, now you're getting that rate buy down. You're waiting for the interest rate to drop for you to refinance, but you're also making more money, right? And so in a year, in 2 years, when that does fall back to the or to the interest rate, even if rates go up, obviously it's a good thing. But even if rates, you said it's 6.75, if they only go to 6.25 and it's not worth it to refinance, well, in 2 years, you're going to be making more money,
Correct.
right? So, like, I think people forget that. They're just thinking they should think more short term,
Yeah.
which we all know real estate is the long game. You got to play the long game in real estate to really see the fruits, to benefit from the fruits of it. So,
And we see a lot of people right now renting. Right. Yeah. So what we do, and I know when we work together, we do this together with our clients, we're going to do what's the cost of waiting. So if you're paying $1,000 a month, which no one's paying $1,000 a month for rent, but you're paying $1,000 a month for rent, in a year, you've spent $12,000. That same house is $200,000 this year. Would you say it's fair that next year it's going to be 206 to 210?
yeah,
Okay, so you've spent $12,000 in rent, and let's say 206 to be conservative. So you've lost $18,000
Mhm.
plus that what you would have bought down on your mortgage.
Right.
So there is a definite cost of waiting. So this product gets people comfortable with their note for 1 or 2 years and let us reassess and see where we are in 2 or 3 years.
Sure. And I don't know, just to go back to the buy down. So who pays for the buy down?
The buy down has to be paid for in total by the seller.
Right.
And the buy down, the amount of the buy down, and this is why it's a little difficult because we can't use broad terms when we talk about this. The amount of the buy down is the amount of savings over the course of the years you choose. So if we choose the 3-1 buy down, that's 3 years you're going to be in a lower interest rate. So whatever you saved every month is calculated, and that is how much the buy downs cost. So if we were looking at this example that we were talking about a little earlier, on a $250,000 loan amount, at 6.75, your monthly payment with principal and interest is 1621. If you do the 3-2-1 buy down on the first year, your principal and interest is 1157. So you're saving $460 a month on the first year. Do you think if we talked about this more to the consumer, they would like to save $460 a month?
Absolutely.
And so over the 12 months, that's a $5,500 savings. And so you go on to year 2, year 3. So if you take the savings, that totals $11,000. So we would have to negotiate with the seller to pay that total amount of 11,000. Like we were talking about earlier, what if we have a seller that only wants to pay 8,000? Well, then we would say, well, maybe the 2-1 buy down will be the best for our clients. And then we can use, in this case, $6,000 towards the buy down and then $2,000 towards their closing costs. Do you see, Mikey, right now, sellers more willing to pay closing costs or less willing to pay closing costs in this environment?
More willing.
Okay, what do you think is going to happen in the spring when that pent up demand starts to open up a little bit? What do you think sellers are going to do?
Yeah, I mean, the sellers are gonna gain some of that leverage back, right? So they don't have much leverage right now, and so if they want to move or if they need to move, they have no other choice but to go ahead and offer some concessions. And so, we have this conversation daily with our clients that what is going to happen in the spring when everybody, or not even just in the spring, but whenever rates get to where people feel comfortable, whenever rates get consistently in the, 5, even 5.9. I think if there's a 5 in it, what's going to end up happening is the demand is going to go through the roof. We won't get like it was in 21 and 22, but we'll definitely see the sellers gain some of that leverage back. And you're not going to have this option.
And it's interesting that you said that about having a 5 in front of it because I think it's just mentally people want to see a 5. We can see on this example with an average loan amount of 250,000, having a 5 in front of the number is only going to save you about $150 a month.
Yeah.
So if we did the cost of waiting, the cost you're paying for rent and all of those other things and added that up, to wait on the sidelines for 12 months to save $150 a month, you're out of pocket.
Yeah.
The money that you're losing is more than is more if you wait
Right.
than if you go is more if you purchase than if you wait.
Correct.
Yeah, I said that backwards.
So the other question I have is, okay, like, let's say we negotiate the 3-2-1 buy down and my client closes on their house, and in a year, the economy's great. They're at a 5.5%, or, interest rates drop to 5.5%. Client feels like, hey, we're going to be here for a while. Let's go ahead and refinance this. What ends up happening to the rest of that money that's now bought bought the rate down? Is it just gone? Does it vanish?
No, that's a great question. It is your borrowers. It's our clients.
Okay.
The money goes into an escrow account.
Okay.
So in example 1, this $11,000 would go into an escrow account with their taxes and insurance, and then every month the payment that is due on this example is 1,600.
Okay.
So if our clients are paying only 1,100, they're taking the $500 from the escrow account out of this money and pulling it and making the total mortgage payment. So on month 1, this would go down to 10,500. So let's say after the first year, same example, buyers want to refinance. In this example, they have $6,000 in their escrow account. That goes back to our buyer. That goes back to the consumer. So it's not money they lose. So there's no down point of doing this because if they refinance, they still get that money back.
So essentially, if they refinance, and now they've got 2 years left on this buy down, they're basically going to be able to take that money and put that towards the refinance. So when people get concerned that like, oh, now I'm going to have to spend a few $1,000s on refinancing or whatever that number is, well, it's actually in an escrow.
It is. And sometimes they'll get some back.
Okay.
There is, misconception about closing costs on a refinance. 99% of the time, they're rolled into the loan amount. So it's not hard costs the buyer has to come up with. However, there are costs. So we're always going to do a analysis of where they are, how much are the hard costs, and if it makes sense. And then when will they make it up? So if it's, $3,000 for a refinance and they're saving $2,500 a month, then we know at one point they have to get to this point before they make up the $3,000.
Okay.
Even though it's rolled into the loan amount, it's still a
Right.
cost. So we have those conversations with them.
So what about, okay, we looked at this example where they would, the typical, with principal and interest would be 1621, the payment, 1621.50. Now, on this, for that first year, it would be 1157.79. Do they have to qualify for the 1621 or do they have to qualify for this
They have
1157?
to qualify for the permanent rate.
Okay, so they would have to qualify for the permanent rate
Correct.
just in case rates never come down,
Correct.
and maybe they just go up, and next thing you know, we're at 10% interest rate,
Correct.
and now they have to be able to pay this 1621.
Correct. So we have to qualify them because this is a temporary buy down. We have to qualify them with the permanent payment.
1621.
If the buyer, like we talked about in the very beginning, doing points or origination and buying down the interest rate permanently, then that is what they qualify off of. But this is just basically a temporary buy down of the interest rate.
Okay. So, Brittany, we've given the audience a lot of good information today. It's probably a lot for them to absorb, but if they wanted to get, more specific information for their current situation, what's the best way for them to contact you?
So my cell phone number is the easiest way to contact me. What I like to do is set up initial consultations. Don't even have to pull your credit or anything, but let me just sit on the phone with you and talk about what your goals are with the real estate, what your objections are, what's keeping you on the fence, when should we pull the trigger, and just run numbers with you and see if it makes sense now or if you do need to wait.
Yeah, absolutely. So, guys, I appreciate you guys tuning in today. If you have any questions, give Brittany a call, give myself a call. You can reach either one of us on our cell phone. And we thank you for choosing the W Group. Have a great day.
Thanks so much.